Hello and welcome everyone. My name is Marsh and I'm the head of partnerships at Kilimanjaro Consulting, and we are thrilled to have you join us today. The topic for today's session is payables as a service. And to unpack what it means for modern businesses, we are thrilled to have DataLine joining us. Now, DataLine has long been a pioneer in automating financial transaction processes across the Asia Pacific region. Founded in Australia in the late 1980s, their early work was in payments reconciliation and invoice digitization. And the company progressively evolved into delivering cloud based account payable automation and payables as a service solutions. Today, with over 30 years of experience, DataLine is helping organizations in Australia and New Zealand streamline their AP operations, reduce manual processing, improve visibility, and strengthen compliance, and all this supported by a blend of automation, AI, and human expertise. As finance functions evolve, we're seeing a major shift towards managed and automated services, and one of the most impactful of these is payables as a service. Now, these are some really big words, and we are so pleased to have DataLine with us today as they share insights on what this means for modern businesses and take us through some real life examples of what all this actually means. A few things to mention before we dive in. Today's session is being recorded and will be sent to the attendees and people who have registered. You will all see a Q&A button within your Zoom interface. Please feel free to ask us anything relevant to the topic and the product throughout the session so others can see the questions and add to the conversation as well. We will reserve time at the end of the session to answer these. Also, you'll see a few polls pop up on your screen, and we'd love to hear your thoughts and experiences. So please take a moment to share your input when they appear. So without wasting more time, please join me in welcoming Paul and Kate from DataLine. Over to you, Paul.
Thanks, Marsha. Hi, everyone. I'm Paul Billette. I'm the CEO of DataLine. I've been with DataLine for 5 years as the CEO and a shareholder, and I'm responsible for overseeing all the operations, the strategy, the growth, the solutions. And with me today, I've got Kate Burke, who's our COO, and Kate's been with us for 3 years. And she oversees all our operations and our solution delivery. And today we're going to talk to you about payables as a service. Thanks, Marsha, for the introduction of DataLine. So yes, really quickly, 30 years in business, started in data matching, reconciliation, moved through to AP, and then more recently in the last couple of years, AI, and now we're doing payables as a service, all integrated and all still relevant. So let's dive in. Payables as a service. Let's see what's next. Companies are definitely seeing the processing and cost benefits of introducing technology today. It's really probably navigating the transition or the how to transition that often remains that sort of biggest challenge. And today we've got this AI-driven outsource model delivered as a service that can change all of that. And that's termed PaaS, which is payables as a service, or APaaS, accounts payable as a service. It's a sort of smarter, more agile way of working, and it's definitely gaining momentum. Companies are seeing 80% productivity gains. They're seeing 80% cost reduction between manual processing and automated processing. And they're moving away from doing day-to-day repetitive processing and concentrating more on strategic priorities. So process improvement can be constrained by those traditional systems, a change program itself, and the cost of change. So now when AI and process automation combine with people in a PaaS delivery model, the barriers to that change are reduced. So let's explore that service offering of PaaS or APaaS a little bit deeper. So I thought we'd just start with the definition so we can all be reasonably clear on what this is. So we've got APaaS, accounts payable as a service. Really means about outsourcing the AP function end to end, from capturing supplier invoices, validating those invoices, sending them into a workflow for approval throughout the organization, matching with any purchase orders or receipts, either in 2- or 3-way matching requirements, preparing payment files, managing supplier queries. All this is delivered as a managed service. It's involving all the tech that's required and all of the people elements that are required, all bordered around by SLAs. Now, PaaS, Payables as a Service, is really interchangeable with APaaS, but some people use it to really cover a bit more of an extension of that payables function, whether it's supplier onboarding, know your customer programs, expenses, compliance, or dynamic discounting. So really interchangeable, but it's really talking about outsourcing those functions through a tech and people solution bordered by SLAs. So what makes up that solution, that Payables as a Service? It's really elements of AI, elements of process automation, and elements of business process outsourcing. And when they all come together, we get this unified solution. So I just want to spend a few minutes on AI and just talk about that. Often you'll hear them called AI agents, AI bots. For Dataline, we've done a marketing term and we've called it AI employees. And really, it's all about building an AI agent or an AI bot to process automatically. And so these bots can be custom or built for you, or they can be off the shelf. So over time, we've built different bots. We've got bank allocation bots, AP assistant bots, email or mailbox managers, and reporting bots. So people could use any of those and just fit them into their organization, or they could be custom and built for you. And they're obviously extendable to other departments and other areas of the organization. So talking a little bit further about AI, because there's obviously a lot out there. It's in the news all the time. And I suppose we sort of think the future AI definitely makes the headlines. Today's AI is really focused, that we're using, is focused on making you more efficient and effective, but it's probably a little bit more boring, so it doesn't make the headlines. So what we're doing is we're taking structured, repetitive, often mundane processes that can be rule-based or provided through a rule structure. And we build a bot or an agent or an employee to run that process automatically. It learns, it adopts, and it improves as it does that. So another good way to look at how we manage AI in our businesses is a 3-tier process. This is something we use when we're trying to talk about AI with our customers. So tier 1 is all about making yourself more efficient. So you'd be familiar with the chat GPTs, the co-pilots, and these are relatively simple tools that you can use to reduce time and effort that you do in your day-to-day activities. And I'm sure most of us are doing that or using them. If not, definitely start playing around with them. Definitely worth looking at. Tier 2, it's about making your team more efficient. And so we use software that really builds multiple agents or interfaces across different interconnected pathways. And so it uses things like Automation Anywhere, UiPath, Power Automate, and these tools allow us to develop agents that improve processes across teams. Now, here we suggest you should engage a delivery partner to help you deliver those in your organization. And tier 3 is making your company more efficient. That's large-scale, multifunctional programs, and that's really the larger end of town. It's sort of your CBA, ASB, your BNZs, ANZs, those guys doing multiple company projects. We're more on that tier 2, but those are the 3 tiers that we like to help explain AI and how it works in an organization. Moving on to BPO. BPO is really business process outsourcing, but here we term it skilled human intervention. So what we're looking to do is combine with our customers on onshoring and offshoring resources. So having the best balance for a delivery model involving people. So people are still in this process because they need to be there for complex decision making, but it needs to be driven in a flexible and scalable way. And then we have intelligent automation. And this is really around data extraction, processing, data matching, approval workflows, and AI-enhanced processes. And then when we put those three together, we get the unified solution of PaaS, which is this end-to-end process, seamless human and AI collaboration, faster, smarter, and scalable. So Payables as a service, what does it look like? So really the end destination is not just about automation, it's about a fully AI-enabled paperless function. So removing those traditional technology constraints, manual processing, and with a new approach to change management, it can really unlock those transformational benefits. So you have real-time payments processing where AI captures and validates and matches invoices. There's no physical touch points, and you're getting an immediate approval routing for workflow. People and technology are working hand in hand. AI agents and AI automation are doing those repetitive rule-based activities, which is scalable through technology, but people are still leading the process. And this reduces costs, improves productivity, and focuses the finance teams on the more strategic elements of their day-to-day work. We get full end-to-end visibility through audit trails and full transparency. It's completely e-invoice capability, so when we need to transition across to that mandated readiness, we're there. And I suppose the biggest other thing is continuous improvement. It's always learning, always looking to improve, and it's reducing exceptions over time, and it's keeping you up with the latest technology and continually improving and reducing costs and processes. So how is it delivered? Well, connecting automation, AI, and people in this as a service delivery model is the game changer. AI-driven employees, you've got cloud-based technology, intelligent automation, delivering high levels of accuracy. They're all interconnected with a specialist people model, and that's starting to gain momentum. So Payables can transform into a scalable, predictable service, and it's matching your business growth and change requirements. We get a faster transition because we're leveraging proven platforms and expertise. There's no longer really lengthy internal implementations because we're using an existing platform, existing AI and automation with experienced people using this technology today. And therefore, we're reducing that knowledge sharing requirements. There's a cost alignment, moves to a pay-as-you-go model, and eliminates fixed overheads. And you have unlimited flexibility, scale capacity up or down. You've got the ability to right size with zero infrastructure investment. And you've got a strategic focus back into the team, freeing your team up from these repetitive processes and focusing on business insights. And then how do we transition? Well, the technology is often the organizational change requirement, and finance teams need to adopt automation, but they still need to maintain business continuity. So we need a tech partner that can de-risk and accelerate those results. And we look at it in this way. We look at an end-to-end process mapping as our first step. We baseline it. We look at your current processes, identify bottlenecks. Is there redundancy available? We look at where we can build these AI agents into that process and where we still need people in that process. We develop a pilot phase and we test that with you. Then we roll out a structured change program. And that's working hand in hand with you. And then together we deliver the technology and people solution. And we move into a full implementation. Technology, people, surrounded with SLAs. It's scalable, it's visible, and it's all signed off through the processes. And of course, we've got this optimization, AI, readiness, ongoing continuous improvement. So is now a good time to change? Well, I think we've all struggling with rising costs. There's always tighter regulations. We've got now either nationally or globally distributed teams, and we're being challenged, and our finance operations are challenged. Are we fit for purpose? We've got workforce and tech transformation occurring with everything moving to the cloud, scalable and remote collaboration as part of solutions today. And this is where traditional models are usually more complex and painful. So how do we keep up? We've got cost and people challenges. Processing costs are escalating. Cost and staff retention is always concerning. And we're no longer really local versus local, we're local versus global. So how do we compete? We've got macro and microeconomic pressures, whether that's our cost center costs under scrutiny, the rapid pace of change, working capital is critical in our organisation, and we need to play now in a global market. So where we can adopt payables as a service, we can gain a competitive advantage. So I'm just going to pass over to Kate, who's going to give you a case study or two on how this has practically been put into action. Kate, can I pass to you?
Yes, thank you, Paul. So this is one of our case studies and a real life example of PaaS in action, or APaaS, as Paul has implied. So this case study is based on one of Australia's largest freight operators. This organisation manages highly complex supply chains across the country, and like many large enterprises, their finance operations have become heavily dependent on manual processes. Both their accounts payable and their accounts receivable teams were operating largely on legacy and on-premise systems, which created inefficiencies, compliance risks, and made it difficult to scale effectively. To put this into perspective, they had a combined finance team of 21 people, with 12 in accounts payable and 9 in their accounts receivable team. Of those, the majority were offshore, while a handful were onshore in critical oversight roles. The challenge was that they were a traditional operating model, lots of manual processing, spreadsheets, and an on-prem system. And whilst it worked, it wasn't scalable. It created inefficiencies, which led to bottlenecks during peak periods, limited audit trails, created compliance risks, and executives lacked real-time visibility into both their cash flow and their liabilities. In short, the business was ready to modernise, not to just cut costs, but to build a more resilient, transparent, and technology-enabled function. So what was our solution? To address these challenges, Dataline introduced a finance transformation model built around 3 key pillars, so automation, rebalance resourcing, and governance. The first step for us was to implement accounts payable and accounts receivable automation. This included intelligent invoice capture through Dataline's technology and our bureau service, automated approval workflows and payment allocations through the digitisation of remittance advices, automatically being matched to data using our AI agents. All of these were designed to eliminate manual touch points, improve processing speed, ensuring that only exceptions were required to be monitored and resolved. Next, we introduced a rebalanced resourcing model. What that means was that the offshore staff would transition to Dataline's offshore services, and the model was rebalanced, essentially reducing the offshore headcount while retaining essential onshore expertise. This structure created an optimised balance between cost efficiency and control, and with Dataline now managing the end-to-end AP function, KPs and SLAs were introduced to ensure that the APaaS solution was being measured and delivered on its promises. Finally, our secure web-hosted portal introduced the governance that the client was looking for. This included digital audit trails, built-in approval controls, and real-time reporting capabilities, giving the executives the visibility and assurance that they needed and looking at their cost control in real time. So what were the results? The results were pretty significant. The combined AP and AI team reduced from 21 staff down to 13, which is a 38% reduction in headcount, all while improving our accuracy, our compliance, and processing speed. This is what you can achieve in terms of combining people, technology, and our AI agents. I really think that this case study really highlights how a modernised technology-led approach can transform even the most traditional finance operations. Our next case study is essentially based on a mid-cap manufacturing business that processes 10,000 invoices every month. Like many growing organisations, they were feeling the pressure of manual accounts payable processing. The high invoice volume was creating bottlenecks, cycle times were getting longer, and supplier relationships were starting to suffer because of delayed payments. They were constantly having to add more people just to scale, which meant that costs kept rising, but efficiency wasn't improving. To solve this, we introduced them and completely outsourced their AP function. This allowed them to reduce their headcount by 2 full-time FTEs and achieving an annual saving of over 200,000. The main, benefit was that their AP cycle time dropped from 30 days to 10 days, while still maintaining over 99% accuracy at scale. So the benefits were clear: lower labour costs, faster payment cycles, stronger supplier relationship, and an accounts payable team that was managed by Dataline, delivering to agreed KPIs. This demonstrates, how the right outsource model can deliver both efficiency and control, even in a high volume environment. The last case study that we have is based on a healthcare organisation that was dealing with complex multi-level approval workflows with frequent exceptions. So this disrupted their operations, and they also had strict regulatory requirements to adhere to. The invoice processing was labour intensive, raising both costs and the risk of compliance violations. In order to address this, Dataline implemented our intelligent approval routing alongside automated compliance checks and validations. What we saw was a drop in approval exceptions, and invoice processing labour costs were cut in half. These changes not only streamlined their operations, but also significantly strengthened their compliance posture and their risk mitigation. In the end, the client had greater efficiency, cost savings, and peace of mind, knowing that their processes were being delivered through automation and technology. Thanks, Paul.
Thanks, Kate. So why Dataline and how do we lead the market? We've got this proven track record, 30 years in the making, but really our experience is all around data matching, processing, and process automation. And we've had experience now for many years with people, offshoring, and for the last few years, we've been working with AI and adapted that into AI agents that can be deployed in a built-for-you model or as a service model. So there's lots of experience, and we've got the case studies, and people are using these services. We've got advanced technology, whether it's the AI agents and the AI automation, but these are now functionally working and delivering real results. From basic to very complex processes, from large to small operations, we can automate those processes at a cost point that's very competitive for those organizations. On-premise to cloud, we have those solutions. And we've got all the security in place, whether it's our data centers being ISO certified, or the T1 security encryption requirements, or international processing security requirements. All of those are in place. And we're delivering that in a local support manner with clear established SLAs. With proactive communications, reviews, and a partnership approach, this is how the Dataline will make a difference and deliver payables as a service. So I think we might have another poll question at this point, and then we can always go to some further questions from the audience.
Yeah, thanks, Paul. That was quite informative. I think for me, there's two things that kind of stood out. When we started this whole conversation, you mentioned the general larger trend that we're seeing, whether it's core finance functions from payroll to procurement, they're all tending to move towards managed service models. And the case study that Kate took us through for mid-cap manufacturing, that was spot on when we're talking about scalability and resilience. So in a time where agility and cost efficiency are critical, having a model that allows you to outsource AP function and helps you scale your business operations quickly without increasing overhead is quite valuable. So thanks for that.
When we pull Payables as a service together, we've got those three modules where it's AI agents, the BPO or the people, and then process automation. And then when we combine those, we're bringing that together as a payables as a solution option. We can individually use each one of those, or we can combine them. So if a customer wanted to take a step-by-step process, that's possible with the end goal in mind, or we can combine them to deliver that end result at the beginning. So it's a good way to be able to either take a step process or move directly into a managed service offering.
Yeah, whatever suits that specific business.
Yeah.
You've got an option. That's great. Questions. So if our first question is around credit cards, we use Budgetly as virtual type credit card as well as traditional credit cards. I see that credit cards are included in the service. Can Budgetly transactions be accommodated as well?
Okay, I'm not really familiar, but I think they can. I think it's used through the Visa network, Budgetly, and it has its own portal. So where it has access into that data, it can be used in that process. The best way sometimes to think about an AI integrated solution and these AI agents and bots without getting swayed by what all we hear in the news is it's a bit like having a human. So you set it up with its own permissions and functions capabilities. So if you employed someone today and they work with Budgetly and they do X, Y, and Z inside Budgetly, you could, as long as it's rule-based, get an agent, an AI agent, to do the same. So it can access systems through permissions and security, and it can run a process flow. And then you integrate it with these data matching and process optimization tools, and then you've got a fully automated solution. So simply, yes, I do believe so. I don't know if Kate would like to add something to it. But think about a lot of these AI agents as if you employed a human being and you set them up in your system and you gave them permissions. That's what you would do with an agent. Would you want to add anything, Kate?
No, I think you covered it all.
Thanks, Paul. And Rita, what we could do is probably if you want to reach out to your Kilimanjaro account manager, we can set up a session with DataLine for you and probably look at it in a bit more detail. So thanks for that, Paul. Another question from Rita. We were thinking of purchasing Ally to assist with automating our AP processes. Is DataLine providing the same type of product?
I believe so. DataLine's AP product sort of streamlines that invoice lifecycle from capturing those invoices, getting the data and digitizing them through to approval workflows. And it's got this ERP integration. So it eliminates data entry, reduces processing time, and provides full visibility, which I think would be the same as ALTI. We, I suppose, can extend from there to these AI agents, additional continuous improvement, and payables as a service models. So what we're trying to do is give more of a holistic view to finance. So you don't need to just do one process with a partner. You can do multiple processes with DataLine, and through AI, that's how we're delivering it, if that makes sense. So it gives us the capability to extend different services and automation. So we can do AP, and then we can extend from that as you see the benefits.
Yeah, and definitely probably a case for having a more detailed session with you guys as well, Paul, to look at the different requirements across the business and see how one product can be used to cater for that.
Yeah.
Thanks, Paul, and thanks, Rita, for the question. The next one is, have you benchmarked current invoice processing times and costs?
Yes, we have. I think on one of the slides you might have seen a manual processing cost moving from 15 to 3. We've done a lot of benchmarking about, I suppose, from a as is to a new, and it's all around that cycle time and that processing time. There has been a lot of studies, particularly focused on AP processing, where generally it says manual processing is $15 to $20. where automated processing is down from sort of up to $3 to $5, depending on the process. So those things have definitely been benchmarked, and you're delivering huge amounts of processing efficiency into an organization because you're taking all that structured, monotonous, repetitive activity out. And so we've got benchmarks we can share as well.
Thanks, Paul. And the last one is, which steps in the AP workflow are most prone to errors or delay?
Yeah, I mean, Kate, do you want to maybe handle that one?
Sure. I think within the AP, and I've experienced this firsthand myself, working in the accounts payable department many moons ago, essentially it comes into that, I guess, data entry. I think that, it's really easy to slip up on that data entry sort of aspect, but also I think the elapsed time, if you don't have an automated system, is also chasing those invoice approvals. So manually, whether or not you're still going to somebody's desk and asking them to sign it, or whether or not now you're doing that digitally through email, it's also that elapsed time that also then creates those bottlenecks. And so when it comes to payment, you're missing your payment terms, you've got supplier queries, so it's a never-ending cycle, right? If you're not organised, you don't have the approvals, you're getting chased for payments, and then you're making errors in terms of that whole data entry aspect. And, it's really easy to add in an extra zero every now and then and making a wrong payment. So, yeah, I think it's the whole process really. And I think that's where Dataline comes in terms of that whole automation and how we can assist. It's really about digitising those invoice and extracting those key data up front to eliminate the data entry, and also we ensure that we guarantee a 99.6% accuracy when we're delivering that to you. So as part of the Dataline difference, we do have a bureau team that validates the extraction of data as well. So you can be guaranteed that when you're receiving that, you're not having to correct any of those errors as well.
Yeah, and I think just adding on the end of that, what we're trying to do is you've got the traditional AP automation process, and you're trying to deliver ultimately as much straight through processing as possible. And whether that's through matching of purchase orders or receipts with invoices, what you're trying to do is achieve that process to automatically happen and then flow back through into MYOB. And some of our clients are getting 80, 85% straight through process. So if you're handling, whether it's 100 or 1,000 invoices, and then that can be reduced down to 200 invoices where you're actually having to deal with out of 1,000, it makes a huge difference. So what we're trying to do holistically is take in your traditional AP processing, automating those invoices and those workflows and getting those straight through processes, but we're adding a level of AI to take any other repetitive but structured processes into an AI agent. And then we're combining that with people. If you need people in the process, we can also assist there and then deliver that solution, and as what we've been talking today about in a more holistic payables as a service. So hopefully that's given you an idea there.
Thanks, Paul. And just on the topic of extraction and existing processes, the next question is, we still have a few handwritten invoices too. How does Dataline accommodate these invoices?
Yeah, I think that's no issue. I think you sort of have in the world of invoices, you've sort of got what they term structured or digitally native, so they start as a digital invoice. Then you've got semi-structured, and then you've got unstructured, and that would be in the unstructured sort of area and handwritten. Today, the way that the AI-based machine learning and OCR techniques use, you can have handwritten invoices come through and really get a high reading when you run these automatic tools over those invoices. What Dataline does do is we have an extra level, which Kate just mentioned. It's called our bureau. And in reality, AI and all of these tools, machine learning, are getting better and better, but they're not perfect. So you'll run it and you might get 80%, you might get 90, you might get 95% accuracy levels. So with a handwritten document, it could be lower. So what we do is we set our machine learning to a level of 100% accuracy. So if the software is not 100% sure that a 1 is a 1 or an I is an I, it flips it through to our bureau, and our bureau then compares the actual document or the digital image of that document with what's being extracted. And that's how we achieve this 99.9% plus accuracy level. Whether it's handwritten or whether it's machine generated, it doesn't matter, we can get to that level.
Thanks, Paul. So in a sense, wherever you are in your journey towards automating your processes, whether you're still, having manual processes, or you've got semi-automated parts of your business and are quite fragmented, or are looking to outsource, I think it's definitely worth having a conversation with DataLine with all the enhancements that have happened in the product to see how we can help your businesses become a bit more efficient. Thanks, Paul. Thanks, Kate. For further questions, if you want us to arrange introductions with DataLine or opt for a demo, please reach out to your Kilimanjaro account managers, and we will help arrange these for you. We look forward to continuing these conversations. Thank you, Paul and Kate, again for your time today, and have a good rest of your day, everyone.
All right. Thank you very much, Kilimanjaro. Thank you, Masha. Appreciate it.
Thank you. Okay.